Hello and welcome to today's video. In this video, I'm going to show you how to build a trading strategy that's right 85% of the time. It's actually a follow-up to a previous video I've done about indicators. I'll link that previous video down below somewhere. So if you're just getting into rule-based or mechanical trading strategies, or you may have been trading lots of different mechanical strategies and you're just looking for more strategies, then I think you're going to like what I'm going to show you. I will take you over to my computer and show you how the trades look on the charts, the charting package. But also what I've done is I've put together a download. It's a PDF download. Put that in the description down below somewhere and you can download that, have a look at that. That's all free. It's just something I put together in the hope that it'll help you become a better trader. So this particular strategy, it's for trading the S&P 500. I've actually tested it using the S&P 500 CFD from Oanda. That's just the data that I was using at the time. Done a lot of testing with it. And as I mentioned, it wins 85% of the time. So a very high win rate strategy, especially for a mechanical strategy. It's ever so simple. It's just got two rules. It trades off of daily charts. It's very, very easy to implement. So two rules, looking at the daily charts, very easy to spot trades when they occur. And over the past 13 years that I've tested, I'll show you the testing data that I've done back to 2005. Over those 13 years, there was no losing years whatsoever, which is really quite good. Average 5-day hold. So if you're deciding whether or not this is a strategy for you, then something you might want to bear in mind, it holds trades on average for about 5 days. That's how long they last. And the free download. It's a free download. Have a look at the PDF. Obviously I'll show you on the video, I'll show you on the charts, but for more information, more document, something that you can keep referring back to, have a look at the download down below. And let's go over to the charts and have a look at it on the screen. Here's how the strategy looks then. Here we are in multi-charts. It's the platform that I use, and what we can see is a daily chart of the S&P 500. I mentioned I'm using the CFD provided by Oanda, but this works with the E-mini future and probably other instruments that follow closely the S&P 500. Up top in this window you can see the price chart. This cyan line that I've got the cursor on now, that's a 10-period moving average on the price. This one below here is a 200-period moving average. And the indicator or the oscillator down below here is RSI, or Relative Strength Index. Now what I've done with RSI, normally the default setting is for 14 periods. Here I've changed it. It's for 2 periods, so it's very fast RSI. Now's a good time actually to mention, quite important, that I take no credit for developing this fast RSI type strategy. All credit goes to Larry Connors and Cesar Alvarez. That's where I learnt this strategy from. They've done much studying with this strategy and the development. Myself, I've done a lot of testing with it, tested all different parameters, and I've done a lot of trading with it, but all credit goes to Larry and Cesar for this. So coming back, we've got the RSI down the bottom. It's a 2-period RSI, and we're looking for just buy signals. It's a long only strategy, so we're only looking for buys. And the first rule is we want to make sure that the price up here is above this 200-period moving average. Basically we're looking for the price to be in an uptrend. If the price is below the 200-period moving average, it's considered that it's in a downtrend or a bear market. So we want to be only looking for buy signals when we're in a bull market. Once we're happy that the price is above that 200-period moving average, we then look at RSI. And what we're doing is we're looking for the level of RSI, for example here, to drop below 10. So if the bar closes and the RSI is below 10, doesn't matter whether it's 9 or whether it's 5, if it's below 10, then we want to buy, then we buy the market. And you can see every time, for example here, and you can see that the software has programmed the buy here, again here, here. You can quite clearly see whenever this RSI drops below that 10, that value of 10, then it's a buy signal. It's as simple as that. So 2 rules: make sure the price is above the 200 period moving average, and whenever the RSI drops below 10, we look to buy. And these are the most recent trades in this particular study, and you can see why it's got a 85% win rate, because it's very accurate indeed. So once we're in a trade, how do we get out? Well, this is where we use this 10 period moving average, this cyan moving average here. What we're looking for is literally the price to close above its 10 period moving average, and then we close the trade, we get out of the trade, we sell the trade. It's that simple. I can zoom in so we can have a look at a little bit clearer. I've mentioned that the average hold on this strategy is about 5 days. So let's look at this one here. So RSI down the bottom here, it closed below 10 and we bought. This green dotted line actually shows linking the trade, and we waited for the price to close above the moving average, which is here, and we sell. That's it. It's that simple. Let's have a look at some results. We can look at the performance report. Now multi-charts does all this for us, so it's quite good. First of all, we can see the equity curve. We might be able to look at it. There's the equity curve. These green dots, let's bring that in view. These green dots indicate when there is a new high in the account made. So most of those, apart from this little iffy period here, I think that was around 2012, it's quite consistent, as you can see. Let's look at the total trade analysis, and that will tell us about winning percentages and that sort of thing. So percent profitable, 85.53% of the time. The amount of trades over that 13 years was 76. The average winning trade was $153. Now on this particular CFD, I programmed the software to trade 10 units. Now 10 units is equivalent of $10 per point of the S&P. So the average trade here of $153 is actually 15.3 points of the S&P CFD. Another statistic we can look at is the annual period analysis. And I mentioned already, over these 13 years, we can see that profits are, well, we haven't actually got profit every year. We got a 2008 here. Notice that there was actually no trades taken, and I'll show you why that was in a minute. But there was no losing years throughout that 13-year period. So in 2008, why was there no trades taken? If I just reset and I'll scroll back so we can look at 2008 and we'll see why there was no trades. Well, if you remember, we were in a bear market through 2008. So as you can see, this is 2008, and you can see the price is below its 200 period moving average. So it was in a bear market. So one of our conditions or rules to get into the trade is that we have to be in a bull market to look for buy signals, but we weren't, were we? We were trading below that 200 period moving average. And that's about as simple as it gets. In the PDF, which I'll encourage you to download, you can click on that down below somewhere and have a look. I've showed you how you can modify the entry signals, you modify the exit signals to suit how you want trades to occur. But I think you'll agree that it's quite a nice looking strategy. It's very simple, easy to trade. I've actually programmed it into multi-charts. It allows me to trade it automated. In fact, I'll quickly show you the code. This screen here is the Power Language editor. This is where we code, and that is it. That is the simple code that I've created to take this, and yeah, I can automate this, so I don't even have to look for signals manually. It can take them automatically. So well done to Larry Connors and Cesar Alvarez for introducing us to this. He actually developed this a long time ago. I can't exactly remember. I believe it was around 2006 perhaps. Don't quote me on that. He done some studies testing it back to 1995, I think, in his original documents, and the results were very similar to what I've just showed you. So it's been a reliable indicator, a reliable strategy for well over 20 years now. Well, that's it for this video. Like I say, don't forget, have a look at the PDF report. You can download that and keep that, print it out, do whatever you like with it, as long as it's of some use. And if you've got any questions about this strategy, then leave them for me down below or contact me. Have a look at some more stuff on my website. It's thetransparenttrader.com, and email me any questions, jared@thetransparenttrader.com, or just leave some comments down below. And I'll see you on the next video. Thank you.